As the stock markets around the nation are showing up quick V-shaped recovery from the fall that took place in 23rd of March 2020, which is in contrary to the fact that we are facing an economic slowdown. With a massive increase in unemployment rates, decline in revenues of various industries, and decreasing in spending habits, still the stock market seems to rise every next day. Now, various economists and experts have referred that the reflection of economy has been moving away from itself, and that being the stock market. Now, this may be a great matter of concern for one willing to invest into the markets right now. And after reading and understanding various articles and newsletters written by experts and chief economists, we could say that the situation right now does not seem to be a good time for any investment into stock markets or any equity funds if you're investing for a short term, unless you happen to be a trader. Moreover, mutual funds may not be the right vehicle still for now to invest on, and that specifically being the equity funds or the mutual funds that are related to the stock markets. But if you're looking for a safe and moderate return for the long-term perspective, that may be for about 7 years to 15 years of horizon, then investing into debt funds would be a good approach, as debt funds are usually invested into government bonds, which are safe investment and could provide you with good returns which lie between 7% to 12% on a yearly basis. But even if you're investing in debt funds, make sure you start with small amount, at least for now. That is for the year 2020, and slowly increase your investment with a bit recovery or upliftment in the economy or the crisis of the country. So if stocks and mutual funds are not a good idea right now, then maybe RDs or FDs be a reliable option. Well, not really, as the banks and various fund managers has decreased the interest rate over most of these investment as well, since the banks and NBFCs saw the impact of lockdown over the business and revenues, as many are facing job instability and are availing the moratorium for their EMI and loans. Thus, the only way to cope up with the situation is to decrease the interest return on these investments. Thus, investing your money into RD and FD may not be the right option either. Now, after figuring out all these, what we are left with is just gold and real estate where we can invest on. Now, though these investment platforms may seem promising, but the deal is they require heavy cash inflow. Also, we are focusing on retail investor, so we can remove real estate from our list. So finally, we are left with investment into golds. Although it requires a bit higher amount for investment compared to most stocks and bonds, but it will never be a bad idea to invest into gold, at least for now, where you don't have any option to safeguard and benefit from your investment. Now, if gold is not your choice, then I suggest to just wait for the right timings, as most of the ace investors, including Warren Buffett, Ray Dalio, are holding the cash for the right timings. And it's not even that they don't have enough cash, whereas they have more than $130 billion in hand ready to being deployed. So if they can wait to invest, it would be reasonable for us to do the same. Now, you might be thinking about when is the right time and why are these ace investors holding the cash? As from all the news and sources of information, we get to find that the stock market has pretty much recovered from the earlier fall and are surprisingly moving upward, like everything is well and good. So the reasoning behind this is history itself, as a recession or economic slowdown is said to occur once every decade. The previous one we saw was in 2008, which was led by the housing bubble. Previous to that was in 2000, which was led by the internet bubble, and many more in the backtrack. So what these earlier crises suggest is that every time recession or economic crisis occurred, it usually took about a year or more than that to form the base. And before forming the base, it usually tends to move upward from the first fall and then the second fall, and the same thing goes on until it reaches the bottom. So experts as well as history suggest that the hike we see right now may be decisive and could be the process of bottom formation, and this might be one of the primary reasons why the experts and the ace investor are selling stocks rather than buying and just waiting for the right timings to invest. Now, it's not that it will surely happen the way it seems, but history is something to learn from so that it prevents us from doing the same things again, whereas future seems to be waiting for the same teachings. As after all, we are in the space of uncertainty and we are certainly ruled by it. So this was Vivek, and if this video was helpful, don't forget to like and subscribe this channel for more such informational contents. Until then, thank you so much for watching. See you in the next video.